But I'm happy to have a weekend soon. I didn't get much sleep lately. Yeah, Peter, you gave me some nice calls today. Hey, Peppo. How did you manage your CHNG trade, Peter? Did you hold to the 9? And did you end up also catching eBay? This one, right? You let me actually open it here. So Peter called this trade for me today. I was already done, and I didn't like this hammer right here, guys. And this hammer right here showed me some buying pressure, but then it did the second doji, which made it look actually better below a daily level, and finally dropped down. So Peter caught it to the short side somewhere right there, as far as I remember. I'm not sure if you held it all the way to the 9 and the 5, but yeah, this was a good trade there. Held it till 12:15. So guys, I'm going to talk a little bit about the trade on eBay, and I think I'm going to do a recap on this one today as well, because this is something really interesting. And remember, I talked about this in our trade review sessions many times. Sometimes the stock is, let me get the pen, every time I'm forgetting to do the same thing over and over. So if I see a good daily chart, let's say on eBay, it gapped up above, didn't the hammer show? Yeah, I'm going to talk about this one right now. So if I see a good daily chart and then the pre-market is holding above view up on the moving averages but going sideways or going slowly up, I'll be long biased on a stock. If I see that stock did most of the move in the pre-market, then I'm not long biased on this thing anymore. Maybe I will be later after a pullback, but after such a huge move, I usually look for a short setup. At the open, I saw this candle right here. It opened up bullish, and even though it did this week right here, it did break the 1 minute high, broke this small consolidation right there. I didn't consider taking it to the long side because I knew that when the stock is so extended, it usually either drops down or it could do fake breakout or do breakout, which is not even giving a good risk to reward. So I take it to the long side, yes, or take it to the long side on a new 1 minute high. Yes, it works a little bit in my favor, and then it just simply gets stopped out. So I was looking at it to the short side. I saw that it started selling off right there, so I took it to the short side after it got the long squeeze down, and then this hammer right here just got me a little bit shaken off, and I bailed on my short right there. After that, it did a small reverse ABCD pattern. Yes, this hammer is scary, and I usually don't take reverse ABCD patterns on against a hammer. But here we had a very extended stock, right? We had sort of shooting star, if we don't include this wick right here on the 15-minute chart. We had a shooting star on the 5-minute chart, and we had a new 5-minute low. So new 15-minute low, new 5-minute low, new 1-minute low, new 2-minute low, all the time frames making new lows against one small hammer on the 1-minute chart. So yes, this hammer against the bigger time frames new low candles wasn't anything huge or scary. So I took it to the short side, put my stop loss at 51.13, because if it goes up or breaks this 51.13, it might just squeeze up at least to that week or this level we had. I had that stop loss in this one and then partial down. So what I want to say here is, when you see a stock which did a huge move in the pre-market, don't be instantly long biased on it. We get that feeling, the fear of missing out. If a stock is going without us, we tell ourselves that what will stop it from making at least 30 cents move, 20 cents move, 40 cents move more. It moved like $5 to the long side. I would need only 30 cents move outfit. But that's a wishful thinking. It could just simply reverse at any moment, and better looking either for a reversal on it or wait for it till it gets into some sort of support area and I'll look at it to the long side. Now it looks decent to the long side, I believe. I'm not taking it to the long side, but look at this. Drop down all the way to the non-moving average in the 15-minute chart. It's been consolidating around this area for like 2 hours already. It's making a new 15-minute high, new 5-minute high. It looks decent to the long side. I'm not trading it because it's been going sideways for a really long time. But if I would trade it to any direction around here, it would be definitely only to the long side now and not to the short side. Hey gents and Daniel. Ken and can you please send the charts to the off-topic chat so that I don't miss them? Because in the main chat I might miss them, I might miss the order. I'll definitely look at them if you don't send them to the off-topic chat if I don't forget about them, but it will be better if you guys send the screenshots to the off-topic chat. So yeah, guys who are new here, just take screenshot of your trades, preferably the 1 minute chart and the 5 minute chart, or the time frames which you are using, and send them in the off-topic chat and we'll definitely take a look at them. So J-Bone traded MGM. This was a reversal pattern. Indicators for him, SPY was strong. He saw a hammer on the 1 minute chart at the low of the day, held above the previous day close, so it dropped down, started going in his favor, pulled back a little bit, held the previous day close, so it did sort of a double bought with the second bottom higher than the first one, and it was way extended from the 9 moving average on the 5 minute chart. Now this is a good setup right there, along with the increasing volume at the low of the day, which is something I also really love when I try to catch those reversals. You got an entry at a new 1 minute high, and you put your stop loss at 2031. This was somewhere right here on new 1 minute low, right? Was your stop loss a new 1 minute low basically? Wanted to get 1.5 hour but ended up getting 1.2. So it's not a great risk to reward, scaled out too early. No new 2 minute low. I think it was somewhere right here, basically below the body of the previous 2 minute candle. Now this is, I like it, this setup I like it. I would have tried to catch it at a new 1 minute high. Why? Just to get a really good risk to reward. It was dropping down clearly. It was making lower lows and lower highs on the 1 minute chart, right? It's just simply downtrending, and finally at the low of the day, it's making a climactic volume right here. Not literally climactic. I would definitely love to see bigger volume bar at the low of the day, but I see that it's almost double of the previous volume bars. This is the first thing, exhaustion volume. Then a hammer at the low of the day with the same thing, exhaustion volume, right? And finally a new 1 minute high above the previous day close. So basically you're having a daily level, you're having an increasing volume, you're having a stock which is downtrending with no new highs, a stock which is extended from the moving average right there, and it's making a new 1 minute high. So yeah, this was the perfect entry. If you missed it, this wasn't bad. This is just showing you that it tried to make a small reverse ABCD pattern on the 1 minute chart, and definitely I'm not taking small reverse ABCD patterns on the 1 minute chart when the stock is extended on the 5 minute chart. So this reverse ABCD pattern, it failed and it started going up, where you actually took it to the long side with a stop loss right there. On the 2 minute chart, exactly, Peter, and you love those, right? You have a 3-bar play on the 2 minute chart. And what's 3-bar play? Well, I'll just remind you guys, for those who are new here, you're having a wide bar candle, you're having a doji, and then you're having another wide bar candle. Once it breaks the previous bar candle, this is a 3-bar play. So 3-bar setup on the 2 minute chart, along with the reversal or double bottom, the second bottom higher than the first one on the 1 minute chart, when a stock is extended from the 9 moving average on the 5 minute chart. And this was the best stop loss you could have. I would have also used this stop loss. On 3-bar setup, your stop loss is the new low, right? Because if it breaks down, most likely it's just going to go all the way down. Now the scale out, you started partially at the horizontal moving average, and yes, it's a little bit too early, but I could understand you. One of my rules is not to go against horizontal moving averages on any time frame, because the stock could simply just go to those horizontal moving average and start forming a reverse ABCD pattern. But still, I personally, yes, I wouldn't like this moving average right here. I would see what it does around this moving average. If it starts holding it and then dropping to my break even, I would exit at break even. But definitely I am not going to partial unless I'm getting 2 Rs at least. Peter, it's not if it's sloping down, I'm definitely also I'm not going to like it so much, because it could just simply start consolidating all the way down and then just simply get stopped out. If it's sloping up, this was slightly sloping up, but I definitely like it more like this. I would just hold on to it. The horizontal, I definitely don't like it, but I might take the setup. This setup right here, it was good and I might have taken it, and I would see what it does around this moving average. If it starts making new 2-minute lows, I would just simply exit at break even because it bounced out of that moving average right here. If it doesn't do that and it continues making higher highs and higher lows, I would simply hold on to it. And I think you would have made a 2R trade, right, if you held on to this one. Hey Zen. But yeah, when this was good, you managed it well. This moving average got you a little bit scared, and that happens. I don't like those moving averages as well. Took your partials, you followed your plan, and you got almost what you wanted to get there. So good job, J-Bone. Now let's see your MGM trade. Wait, I saw your MGM trade. Oh, this is another trade right there. So you then got it for an ABCD pattern. Look at these guys. So he took the reversal right there. Started partialing a little bit early partials. And he saw that this still didn't fail, right? It dropped down right there. Held around 1010, which was somewhere right here, and then started breaking all the moving averages and going to the long side. When he saw that the setup still didn't fail, he didn't chase it. He didn't take it to the long side anywhere in the middle right there when it's stuck between moving averages, right? You can't really take something to the long side right here, having your stop loss right there, when it might actually bounce off this moving average right here, right? It's tough to get it against moving averages unless it's the second time it's going into the moving average, right? So if the stock is going into the resistance the first time, you don't go against that moving average. If it's going into it the second time, most likely, not 100%, but most likely it is going to break it. Now, let's see what happened there. It squeezed above the moving averages, squeezed above the moving averages on all the time frames. On the daily, it's strong, right? You see a clear uptrend on the daily. So he took it to the long side on an ABCD pattern on the 2-minute chart, on above all the moving averages are there. On the 1-minute chart, we're having this moving average. I definitely don't like it. But what happened? First time it bounced out of it. The second time it breaks it, right? This is small ascending triangle right there. So that was a good entry and strong on the SPY. On the 9 on the 5-minute chart. 9 on the 5-minute chart. Unfortunately, I can't see that right there because it's a little bit later, but it's fine. Entry 21.17 for a new 2-minute high, and stop loss 20.31, a new 2-minute low. 20.31. What? I think you did something wrong right there, right? On this setup. No, this is the reversal here. You didn't change the nose, J-Bone, I think, on this one. But yeah, I think this would have been the stop loss right here. I mean, if I'd taken it to the long side for this breakout, this would be the stop loss right here, maximum. Yeah, I see that. So yeah, this was the stop loss, and I would have used this stop loss right here. Because if it breaks this, it simply breaks the descending triangle setup. Took it to the long side, held onto it, and you got almost 2 hours, which is good. So it's because the stock was up so much the past 2 days, including today, scaled out quickly. Yeah, this isn't bad. You started scaling out and you got the risk to reward which you wanted to get. So yeah, good job on this one as well. Peter. So guys, I'm going to go through 2 trades for everyone for now. If you have time, I'll take a look at the rest because we're having a little bit lot of trades there, and yeah, if I have more time, I'll go through the rest. Peter B, here I wanted to ask you if there are any visible signs that the setup will not work. So look at this, JPM, and let's see what happened there. JPM, higher highs and higher lows on the 5-minute chart, extended from the 9 moving average on the 5-minute chart, clearly making higher highs and higher lows on the 2-minute chart. See these guys? No new 2-minute low. On the 1-minute chart, look at this. 30 minutes with no new 1-minute low. And finally, it's closing as a doji at the high of the day. on the 5-minute chart, a doji at the high of the day on the 2-minute chart, and a doji at the high of the day on the 1-minute chart, starting to make new lows where you took it to the short side. You got also climactic volume at the high of the day, and I'm not sure if this is daily level or you just marked it later, but if it is, then you also had a daily level on your way. So this is an A plus setup. I like this setup. It is the high of the day you marked it. Okay, so this is an A plus setup for me. I would also like this setup so much to the short side. You took it to the short side and then it just simply started bottoming at the top. There was nothing clear that this setup wouldn't have worked out. I like it. Everything was there. You took it to the short side and it just didn't work out. So even A plus setups, if you have all the criteria in it, it's not necessary that it will work out, right? You go for the probabilities, you go for the risk to reward, you pull the trigger when the setup is ready, and then just see if it's going to work out or not. Just follow your plan and follow your rules. Hey Mick, it was a good day. I did only one trade there. Policy, what about the time of the day on the trade? I think reversals like that work less early than AM on such strong move. Policies, the time of the day doesn't really matter. Stocks, they always pull back, and I love it in the morning as well. Why? Because on the morning, the first 30 minutes, the first 1 hour, a lot of traders are still there. The volume is still high at this time. Setups work easily, and if you get some volume, if you get some momentum into a setup, they work out really well, even better than they work in the afternoon. So yeah, the time of the day doesn't matter. The most important thing is to have the criteria which you want to see in the setup there. Yeah, exactly, Peter B. I used to think the same, Pilot Fish, but the long I'm too many green bars in a row, it's unusual to me. Yeah, so if I see this and it's really strong, I'm definitely taking it on a new 1 minute low, because if I was long anywhere right there and I held it to take a partial at a new 1 minute low, I would take my partial right there. Right, this was already so extended. I'm not going to hold it for a new 5 minute low, or I'm not going to hold it to the 9 moving average in the 5 minute chart to make sure that it's going to bounce out of it. This was already a huge move with no pullback. So the first wave down, the first candles to the downside, I'm going to take a big partial there. I mean, that's how I trade the longs, and that's how I interpret it before I take it to the short side. What did it do after? I'm interested. Let me actually check JPM. Yeah, you see guys, eBay, new 15-minute high. Let's see if it gave a good 1 minute chart. So we talked about this right at the open. That's it. It did sort of fake breakdown right here, came back up, and yeah, at this moment when we talked about it, once it started making 15-minute highs, it was more of a long than short to me, because this was a decent pullback, right? This is the 50% pullback, and if you watch my ABCD webinars, I love when I see a pullback between 50 and 70%, maybe 70-80%. So these type of pullbacks on ABCD patterns, I love them. If the pullback was only to the 9 and the 5, this would have been really small pullback right there. It's 50-50, right? It's not even 20% of the move. So yeah, if it bounced off the 9 and the 5, I wouldn't have taken it to the long side. But right here, parabolic pullback, W shape right there, W shape right here, new 5-minute high, new 15-minute high. This was decent long right there. Let me see what JPM did there. So that was here, where it took it to the short side, and then it failed and it did a new breakout right there. This breakout wasn't so strong actually. So you see, this is sort of an ABCD pattern. It consolidated, type 1 ABCD pattern, consolidated all the way till it get into the 9 moving average in the 1 minute chart, bounce out fed, take it to the long side, stop loss, new 1 minute low. But look at the breakout. The breakout wasn't strong. This was a really small breakout. After this consolidation, after this move, if it's really strong, I would expect the breakout to be a little bit stronger. But it did only small fake breakout right there. Started getting the climactic volume right here. New low, small double top with the second top lower than the first one. This should have been a good short. This should have been a good short. But it would have been a little bit tough because the pivot point was so close and it could just simply bounce out of it. But yeah, it wouldn't have been bad to try to re-enter on this thing. Let's see your trade on MU, Peter. So low. Now it depends for me. If you see something so clear like JPM here on the 1 minute chart, it's making higher highs and higher lows on the 1 minute chart, I would take it to the short side on the first new 1 minute low. Okay. Now, if the stock on the 1 minute chart is going up and making small new 1 minute lows, up, small new 1 minute lows, up, small new 1 minute low, but on the 2 minute chart, it's clearly making higher highs and higher lows. So the new 1 minute lows are somewhere inside the 2 minute chart, right? In this case, I would look for confirmation on the 2 minute chart. I would wait for a new low candle on the 2 minute chart, because there were many fake 1 minute lows right there. So it just depends on the price action there. If it's making higher highs and higher lows on the 1 minute chart, so clearly I would take it on a new 1 minute low. If there were few new 1 minute lows, fake ones, I would prefer waiting for a new 2 minute low. Peter, let's see what you did on MU. And look at this, guys, same thing, right? MU clearly going up, increasing volume at the high of the day, new 1 minute low. One thing which I don't like is when we have engulfings at the high of the day. I want to see a good looking 1 minute candle, a doji or a shooting star at the high of the day. So what confirmations did we have right here? We had a stock which is extended from the 9 moving average on the 5 minute chart, right? We had a new 1 minute low. We had the climactic volume. Now, the other rules which we don't have here, a resistance at the high of the day or at the level it bounces from, it's not there. A good looking 1 or 2 minute candle, also not there, right? I mean, are there any trade ideas step to get stocks in trend after 9:45? Yeah, I'll get to that right now. So yeah, this wasn't the worst. It was good. Wasn't the worst. You tried it, you took it to the short side, but one thing, you got yourself a little bit chopped out in this trade, right? So you took it to the short side, and remember, we put our stop loss at least at the high of the body, right? Not the wick, and you would have been stopped out right here only one time, right? We don't get it tighter inside the range. I do that sometimes, and that's when I'm breaking my rules, but the stop loss should be at least the body, right? I'm not using the wicks, never use them, but at least the body. So you take it to the short side, it gets you stopped out right here, and then it's done, right? And then the second was lasting 10 minutes. Yeah, this was scary right here. I would hold to this one, to be honest. I would hold on to it until it makes new 1 minute, 5 minute high. So sometimes one of my rules in this setup is to get out if the stock is bouncing off the 9 on the 2 minute chart and starts making highs, or the 9 on the 1 and start making highs. But if I am uncertain about it, if I still believe that it might work out, I would hold it till I see a new 5 minute high. I could hold against a new 2 minute high, that's no problem. I could hold against a new 1 minute high, no problem, but definitely not holding against a new 5 minute high, which was your exit. So yeah, I still like how you managed this one. This was a good setup, but yeah, you didn't get lucky on this one. Pepo, if you want to catch, if you mean that you want to see a scanner which is showing you stocks which are extended from the 9 on the 5 minute chart, there is the multi-strategy scanner in the chat room. It's calling you similar stuff like this. If you want to find a stock, a scanner which is showing you the stocks which are uptrending, I think we don't have one so far, but if someone has, they can send it to us. We'll take a look at it. I will backtest it, and if it's useful, we could add it to our scanners list. What do you use the 15-minute chart for? Do we always need to use that chart? I see Andrew just using the 1 and the 5-minute chart. So Vic, there is no must chart, okay? You could use only the 1 minute chart. You could use the 1 minute and the 5 minute chart. You could use the bigger time frames only. Henry, if he's here, he's using the 15-minute chart and the 30-minute chart and the 60-minute chart. He don't even have the 1, the 2, the 5 on his screen. So you could use whatever time frame you feel is useful for your style and your setup. If you don't feel like this time frame would be useful for you. If it's just going to get you a little bit more confused, then just don't use it. I personally use 6 time frames: 1 minute chart, 2 minute chart, 30 minute chart, 5 minute chart, and 15 minute chart. And all those time frames are good for my setups. Depending on the setup I'm trading, I need to see different time frames. The 15-minute chart is giving me a little bit more picture of the trend or of the idea of the stock and how it's trading, like eBay. Look at this. If you look at the 5-minute chart, it could seem to you like it's descending right here, like it's chopping right there. But on the 15-minute chart, I see that it's making an ABCD pattern, but on a bigger time frame, on a 15-minute chart. Now, if I see a setup forming on the 15-minute chart, I would need to get an entry on the 5-minute chart. If I see a setup forming on the 5-minute chart, I try to get an entry on the 1-minute chart and the 2-minute chart. And look at this eBay, guys. See, we called it right here, and look how it's going right there, right? 50% pullback, really clear right here. And now it's breaking up right there. So I use the 15-minute chart to identify a trend. Then let's see what you did there. How many montage do you have to those charts? Only one montage. 6 charts, 1 stock, 1 montage. I have 4 screens and 4 monitors. I have 6, but I actually can't use 6 because I get confused. I watch 3 stocks at a time. In my each screen has this same layout right here. And the 4th monitor, I use it for the scanners and the chat room and the SPY. Perfect. So UAL, Dan also traded a parabolic reversal on UAL, and look at these guys going up, extended from the 9-moving average on the 5-minute chart. A good looking 2-minute candle at the high of the day, increasing volume at the high of the day. Got it a little bit earlier before the new 2-minute low, but still that's fine. You got it on a new 1-minute low, I see right there, right? I'm not sure what is your stop loss. Did you put your stop loss at the high of the body, or you just gave it some, or you just gave it some room right there on the 2-minute chart? Slightly below the body. So your stop loss was somewhere right there, which is not bad. You had around, let's see, around 20 cents stop loss, I would assume, 25, somewhere around that. And then you start partial link closer to the 9-moving average on the 5-minute chart. Small reverse ABCD pattern on the 1-minute chart. Small reverse ABCD pattern on the 2-minute chart. Selling pressure wicks right there. Selling pressure wicks right there. Added to the position. And partial a little bit more down, which was good. Now let's see why you added there. 39.54 key resistance. Do you think this was a good add? So yeah, regarding this add, if I wasn't in this position, I wouldn't take this trade because it's so close to the 9 on the 5-minute chart. And looking at this, the risk to reward isn't enough great, right? But if I'm already in it and you're already in it and you took some partials there, you have 30% left or 20% left of your position, you could add to your position right there. You are risking not your money, you are risking the unrealized money. So yeah, this was a good add in a position. And look at this, broke the 9 on the 5 and then started going back up. I'm not sure what it did after that, but I think it's selling off because this was already a huge move. And UAL, it doesn't move a lot usually. So this was way bigger than the average true range. Did it sell off? It didn't actually sell off. W shape right here for an ABCD pattern and not a bad long. So you see these guys, third type of ABCD pattern, extended from the 9 on the 5, pulling back to the 9 on the 5, making a new high right there. We don't take it on the first leg up after a huge drop right there. This is a parabolic drop. A, B, C. We wait to see what's going to happen. Is it going to do a double top with the second top lower than the first one and sell off? Or if it's going to do a W shape and make a new high. And that's it. It did that. Take it to the long side. Put your stop loss depending on the time frame you took the trade from. And go for the risk to reward. Does not matter that the inverted hammer with the climactic volume of the 2-minute chart was green. No, Caesar, it doesn't really matter. Because you see the selling pressure wick right there. If the wick is so huge, and then you have the body right there, whether it's green or whether it's red, you see that the sellers pushed it down at the high of the day with an increasing volume. So the sellers won right here, right? So it doesn't really matter whether it's red or green. Yeah, IG. So parabolic reversals, they are tricky. Why is that? Because you're going against a strong stock or against a weak stock. You are going for a reversal after an extended move. It will always be against a strong stock. That's the key when you are taking those trades. And you're not going for a reversal. Remember this. I'm calling them parabolic reversal. Maybe that's a wrong name, but it's weird to call them parabolic pullbacks or whatever. Anyway, when you are getting into those ones, you don't aim for a reversal. You don't aim to get a move all the way to the low of the day. You just simply aim to get a small move, an early move once it starts getting heavy, all the way to the 9 on the 5-minute chart for a pullback, right? Those longs right here, who are good at holding, they will start taking profits at one time or another. And you need to catch that moment where those longs are starting to take their profits and go for a short with them. They are partialing, you are shorting, the stock is pulling back, getting into support, they are adding to their positions, you are bailing on your position, and the stock's going up. If it's weak and it's dropping down, you could wait for a setup or a reverse ABCD pattern to add to your position and go for a bigger move, and that will be a reversal after that. Peppa, if you can send it in the off-topic chat, please, so that I don't miss it, and thank you. Just the screenshot here will get lost during between the questions there. Let's see. Caesar. Peppo, I usually watch all the airlines in the pre-market, and I check the pre-market price action. They're usually trading similar, right? Not identical. Some will be more clean than the other. Some will give you a better risk to reward. Some will give you a better setup. Some will just consolidate. So I look at them in the pre-market, and then I pick the ones I like to trade. And most of the time, it's either UAL or AL I'm trading. So let's see here. Caesar traded MGM. Took it to the long side in the pullback when it bounced from the 50 moving average on the 5-minute chart. So you see there is a 50 moving average right here. It dropped down there, it started coming up, and you took it to the long side. Now this is just a little bit risky, I believe. I do that sometimes if there is a wall on the level 2. So if there is a wall right there, or if it's starting to hold clearly at the level right there, I would take it to the long side with no confirmation, with no new 1-minute high or no new 2-minute high. If there is nothing telling me that this is a long, I would not really take it. Why is that? What are your confirmations to take this thing to the long side? A bounce or a small bounce of the 50 moving average on the 5-minute chart, right? There is no new 1-minute high. There is no good looking 1-minute candle or 2-minute candle, right? It's not sitting at a support which it held for a long time. It is making a new 5-minute low, which is actually a short sign right there. So basically all the indicators right here are more to the short side than to the long side, and we want to get, and we also have a horizontal moving average on our way, right? So basically a lot of indicators which are telling us to avoid it, to avoid the trade. Just wait for more clear setup, and here I would like it more to the short side. You see that there was a support right there, it got it broken, it dropped down, it pulled back, curling below the 9 moving average in the 1-minute chart, which is my scalping setup right there, closing at the doji as a doji, making lower high, lower high, lower high, and then a new 1-minute low. This wasn't a bad short right there. The first time it bouncing of the 50 moving average, the second time most probably it's going to break it right there. Now let's see what happened after that. You got into the short side one more time, and this is just a little bit risky again. Why is that? It broke the low of the day here, and usually when the stock is breaking the low of the day, we want to see it either running or pulling back, rejecting the resistance, and then continuing to drop down. Right here it got back into the range, right? So since it got back into the range, I don't really like it so much, but I see that it's still holding the 9 moving average in the 1-minute chart. It's still not bad, right? You took it to the short side, and if I'm really believing that this thing is a short and that it might work out, I would put my stop loss at the technical level, the level it bounced off, right? It's chopping in a range, and when we are getting into a position inside the range, we put our stop loss at the range. If you take it to the long side, somewhere right here, your stop loss will be the low of the range. If you take it to the short side, your stop loss will be the high of the range. If you use that, you would never get stopped out, right? And you would be able to add to your position right there. Yeah, you didn't like the entry, so you exited, which is totally fine. Sometimes we get an impulse entry, an impulse trade, we don't like it, and it's good that you're managing your trades really well. You see that you did something wrong and you exited, and then you try to get a better entry when you saw that every time it's getting into the 9, it's closing below it, it's starting to form a descending triangle. You're having a reverse hammer right there. New 1 minute low, took it to the short side, and I love how much you held into this one. You waited to the break of the low of the day, and this partial, this is amazing. It's so rare to see this, but it's so satisfying to take a partial at the low of the day, right? This ad right here wouldn't do that because it's already extended, right? Look at this, it's so extended from the 9 moving average in the 5 minute chart. You are having a hammer at the low of the day, increasing volume at the low of the day. This is a parabolic reversal right there, right? You're going into a reverse ABCD pattern against the hammer on the 1 minute chart with an increasing volume when it is extended from the 9 and the 5. So basically this is a place where you should consider either taking partial of your last position or exiting out of it, or start looking at it for long side. And we reviewed a trade where I think it was Peter or J-Bone took it to the long side right here, which is a good entry to the long side. Open range breakdown on the 5 minute chart. Yes, exactly. This would have been also a good 3-bar setup to the short side or a 5 minute open range breakdown. Mike, Martin, what do you mean by a wall? So Mike, a wall is a huge amount of share size right on your way. So let's say the stock is now sitting at 2070. It's trying to break it, but it can't. And let's say on the level 2, on the bid, you are having maybe 200,000 shares or 300,000 shares. That's what I'm calling a wall. Stock is going into a wall, and it will not be able to break this level right here unless all those shares get bought right there. And if a stock is making around 100,000 shares per minute in volume, you see that it's 100,000 shares are getting traded each candle, and the wall is 300,000 shares. I would assume that this is a strong wall and it might hold the price. It is extended from the 9 moving average in the 5 minute chart. It did already a huge drop right there. And it's sitting at a wall which it can't break because the wall is way bigger than the average volume it has on the 1 minute chart. So yes, because of that, I might take it for a reversal of this level. And I'm not going to wait for the break of the wall to get stopped out. If you wait for the break of the wall to get stopped out, you will get way big slippage. So if the wall was 300,000 shares and I see that it's getting eaten and now we're having only 100,000 shares, I'll just simply bail on the trade. Pepo, thanks. I have been working on my pre-market and how to get stocks in play now. I use most of the common of all the moderators of BBT. However, good luck to get my own in future. So Pepo, personally, my watch list, you could see that most of the time it varies a little bit from the watch list which our moderators have, right? Because each of the moderators have their different trading styles. Thor is trading levels and trading the level 2. Peter is a view up trader. Andrew is a momentum trader. I like the trend trading and reversals. So depending on your style, you try to pick a stock with a price action which would give you a setup suiting your style. For me, I want to see a clear trend or a breakout on daily levels to go for trend continuation, or I want to see a stock which is so extended on the daily to get a reversal on it. After I see this on the daily, I try to check the pre-market price action. I either pick a stock which is already extended in the pre-market, which was eBay, to try to catch a reversal on it, or I try to watch a stock which has a choppy price action going sideways, but above the moving averages, so that I could take it at the breakout of the level in the pre-market to the long side. Those are my criteria when I'm watching, trying to pick my watch list. Yellow, that's why we try to exit. We don't wait for our stop losses when we are trading against walls. We try to exit a little bit earlier. Then I traded only eBay today. Extended, right? New 5-minute low, new 2-minute low, new 15-minute low, short, and then just partial all the way down. So I liked eBay. I also had on my watch list. What did I have on my watch list except for eBay? Let me quickly check that. So yeah, I had eBay, I had AAL on my watch list. And why did I like AAL? Look at this, breakout, right? Remember what I told you guys? I want to see a stock which is going sideways in the pre-market but above the moving averages, and I want to see it breaking out above the consolidation area. So here it broke, it gapped up above the consolidation area. I didn't take this thing because I was already done on eBay, but you could see broke above the pre-market level after the consolidation, and then it shot up. Those are my criteria. So if I missed eBay, I would have waited for something to do on AAL above the pre-market area because of the daily chart right there. And I don't really remember what was my third stock right there. Then it was 6 hours. Yes, it is trending higher, but it's not going so much. You see that it's going up with pullback, going up and pulling back, right? So basically it's not, if you compare AAL, and let me open eBay here, eBay, mini chart, 5-minute chart, right? If you compare this price action here and this price action here, you see that this is decent, right? It's been less than $1 range, right? It's just going up and making a decent pullback, going up and decent pullback. At the open, it's the same thing. It didn't make the whole move in the pre-market. Was it this one? I don't think it was ERI. I don't really remember. Because I'm having my second list as well open there. Anyway. Okay, so it was ERI. I might have picked ERI because of this. Right here, the daily chart gapped up above the consolidation area for an uptrend. The pre-market, it did a huge move right there, but then it dropped down, then it did a huge move up there. So I was long biased on this thing, but looking at how it moves right here, I'm glad I actually didn't trade this thing. So let's see this trade right here. It was a pre-market trade, right? What I love about what you did right here is that you closed your position, which you took in the pre-market. Let me open this. Is that you close your position before the market opened. At the market open, you are getting way big volume, and the move could be really violent. And if you hold it at the open and it makes $1 move or $2 move in 1 minute candle, which could happen, you could just simply lose a huge amount of money. My rules for trading pre-markets is to have either more than 1 million shares traded in pre-market, or to have a clear support area, even if it's 100,000 shares. If I see a clear daily chart and a clear support in the pre-market, I would take it. But mostly I take them only if I see that more than 1 million shares have been traded in the pre-market. So I can see the 5-minute chart here, but I could see that it started holding sort of a level right here, making higher lows right there. You took it to the long side, it broke up, pulled back, and it started working out, but you closed it because it was the pre-market, because there was still no reason to exit there, right? Okay, now let's see your trade right here on AL. You took it to the short side at the open, right? What was the reason you took it to the short side here? Long, This is the moving average cross sign. Oh yeah, this is the moving average cross sign, I assume. Okay, so it was a long right here. Now a long I like it. Why is that? Look at these guys. It broke the support area. It broke the support area and it got sold off, right? When I see this, I'm definitely short bias on this thing, and I would be looking for a setup to the short side, and when it gives me one, but it didn't do that. What happened instead, it did an engulfing candle on the 1 minute chart, and this is the engulfing crack setup. Engulfing candle on the 1 minute chart to the downside, and then an engulfing to the long side. Now we need the crack, right? The crack which happened right here. You take it to the long side, put your stop loss at the low of the week. I definitely wouldn't add right here because this is already a huge move, and this is where we start taking profits at the pre-market high. But I see you added there, and I'm not sure what was your stop loss after the add. Did you start small and then added more, or you started with full position and then added more? So if you start small, add it because Andrew said it was good for a long. Okay, Andrew is a good one. Definitely. That could be a good technical indicator as well. So if I take it to the long side here, full size, I'm not going to add to my position. And if I add to my position and double my share size and double my risk, if I get stopped out and get to my max loss for the day, I'm definitely done for the day. If not, and I'm taking it to the long side right here with a small share size and adding just to get into my full position, that's totally fine. And I think that would be smart right there. However, starting small and adding to your position on the way up will just mess up your average and mess up your risk to reward. That's why most of the time I simply get full position immediately once the setup seems ready. And here I see that it was ready. So you took it to the long side, added to your position, and then you partialed all the way up, which is not bad. It was not bad. Yeah, it's sad to see that, but it was totally fine. I don't think it would have been smart to hold it through this drop right here. Hold it through this drop here, it would be fine. It's not doing a W shape to the long side. It's actually breaking even lower right there. So it's not really good to hold it through this thing. You might get lucky if you hold it past your loss and then get this move, but most of the time you'll be getting huge losses. So it was smart exiting at break even. Always after taking partials, don't let your winner turn into a loser. Just exit at break even. Then you're having sort of a W shape right there on the 5 minute chart, or ascending triangle, whatever you see right there. Getting in at the breakout would have been really good for this move. Yeah, but this was a really huge move. It's so rare to see AL making this move. Mike, the huge wall depends on where you want to take the trade to. If you want to take it to the long side and it's dropping right here, you want to see the wall on the bid. If it's going up and you want to take it to the short side, you need to see the wall on the ask. The level on the ask, let's say the 200,000 shares, should be way bigger than what you see on the bid. If you see on the bid also 190,000 shares, for example, let me actually draw this one. So you have $16 and you're having 15, let's say 98. Okay, this is the ask, this is the bid. Now if you have on the ask a wall of 200,000 shares and on the bid at 1598 a wall of 190,000 shares, let's say, I'm not going to take it to the short side because it will not go below 1598 unless those shares get filled, and it will not go above $16 unless those shares get filled. What I want to see is a huge wall below the ask if I want to take it to the short side, but a normal share size on the bid, 1,000 shares, 10,000 shares, so that it could go lower. Yeah, this was smart. I wouldn't have also added right here on the way up because here it's making the move. This is the place where you are starting to take partial, not adding. We usually try to add on pullbacks to our positions. Okay, let's see Mark. Set up 2 minute open range breakdown to the short side and I see this 2 minute and it did a new 2 minute low. Signals failed to get back to the pre-market high at the open, and I definitely like this thing to the short side. We talked about this, so I will not take too much time on it again. Stock already did a huge move to the long side in the pre-market. It's smart to look for a short setup on it. You took your usual early partial and got subbed out by a few cents. The bad side of early partials. Yeah, that's exactly what could be said. If you take early partials and the stock is getting into your break even, you definitely get subbed out. And that's why usually I try to hold until 2 to 1. If I get the 2 to 1 and then I take a partial and then it gets to my break even, that's fine. But if I take a partial at 1 to 1, then I get subbed out at break even and then it gets to 2 to 1, that's really sad. But yeah, the setup was good. Maybe you didn't hold on to it a lot. If it gave you the risk to reward you wanted to get and you took a partial and then got subbed out at break even, then that's actually fine. Yes, Hans, that's what I'm doing when I'm trying to trade the walls. Now let's see what you did on JD. VWAP rejection turned into a VWAP breakout. Signals indecision doji on the 1 minute chart. Then reclaimed of VWAP and strength in the SPY. So let's see, the stock dropped down a lot in JD. It was extended from the 9 moving average in the 5 minute chart, I see. Started going up. I'm not sure I would have taken it to the long side right here, but I see that your target was the moving average, so that's totally fine. If your target is the resistance, you could take the entry. If the risk to reward isn't there and your target is way further right there above bunch of resistance, then it's better to avoid it. Added more on the way up, took some partials, which is not bad. This ad, I'm not sure if this was a short and a partial or if this was an ad. If this was an ad, for sure I'm not taking this thing. It's 1, 2, 3, third continuous candle on the 5 minute chart. You took it within the 2 minute candle, but this was already a huge move right there with no pullbacks, right? I want to see a little bit more of consolidation before I take it to the long side, and that's here, right? More consolidation, and this ad was smart. This I liked so much. This was just a little bit risky. It did a doji after a huge move and then a new 2 minute low. It could just simply go back down. Not 100%, but that's what it looks like at that moment, right? Once I see that it's actually holding it, once it's making this W shape right there and starting to go up, this was a good ad right here. Yeah, but it's good. I like how you managed it. I like this ad to smart and the partials as well. So good job on this trade. Let's see Han. Guys, I'm actually going to go for one trade now. We're having way too much trades today. I'm so sorry. If I don't go through some trades and you still have any questions regarding your trades, just email me them and I'll definitely take a look at them. So MGM, this was also a good trade right there. A descending triangle on the 1 minute chart with a 10 minute opening range breakdown and a 3-bar setup on the 5 minute chart. What's 3-bar setup? Just quick reminder. Huge candle inside the small doji and then a new 1 minute low. That's it to the short side and other way around to the long side. Stock is dropping down. It's breaking a support right there. First time it's bouncing out of it. Second time it's breaking in it. Making a bear flag, making a 3-bar setup, making a reverse ABCD pattern, whatever you want to see it. With a descending triangle on the 1 minute chart. Took it to the short side, which was a really good entry. And I love how you partialed right there. And I love this partial. These are really satisfying. So yeah, good job on this one. Let's see Daniel. And then Lou. Had a really tight stop loss. Yeah, so if I took that thing to the short side hand, the trade which you have taken, it would have been only new 1 minute high for my stop loss. You took it after that reverse hammer. This here, I would have put my stop loss above it, somewhere right there. Or the 50 moving average or 200 moving average right there. So yeah, that would have been enough. I wouldn't have used the 5 minute chart moving average because it's clear where it's bouncing right here. I would have used the 1 minute chart as my stop loss there. So let's see. BA trade. Stock is bouncing off support right here, trying to make it back to the low of the day, but it can't. It's going up, right? So it's starting to form an A, B, C, consolidating, breaking up, D. What I don't like about this thing is that the breakout was weak, right? It's breaking the high of the day. It is an ascending triangle. It's also an ABCD pattern, which is breaking up, but it's not strong enough. The breakout wasn't strong, right? And then it's getting back down into the range, so it's starting to form a head and shoulder, sit up, shoulder, head, and now it's starting to form shoulder. And I want to see if is this head and shoulder going to form out or it's going to fail. If I see that it's going up, now this is the shoulder, it's starting to form down, I either take it to the short side for a head and shoulder, or I wait for it to break it and then take it to the long side. So you took it to the long side when the second shoulder was forming. You add it to your position when the second shoulder was actually formed, right? And then you exit on this thing. So yeah, I wouldn't have taken it to the long side right here. I would have waited for it to either break the half of the day, pull back, and then take it to the long side, or I would take it to the long side if the head and shoulder setup gets broken. If it goes from here and works out immediately, I would just simply avoid this trade. What do we have after that? We had Zoom trade. Now this is amazing, right? A, B, C, sort of a W shape right there, and you take it to the long side, stop loss either below the bodies right there or below the wicks, depending on how you want to manage it, and then just take the partials. You didn't wait for the breakout, unfortunately. You partialed closer to the resistance area, inside resistance, those wicks right there, and it gets sold out at break even, after which it actually worked out. So yeah, it just depends on your style. If you took it to the long side with really tight stop loss and it gave you good risk to reward at this pop out, it's totally fine to take that partial. If the risk to reward wasn't there and the setup is looking really good right here, I would have just held it for the breakout. %, at 2 hours, and the rest at break even. Yeah, that's sad actually, to take a small partial at 2 hours and then lock in at 0.25 or 30 hours, but you managed it well. It's good to exit at break even after you're taking some partials. You can't let a winner trade turn into a losing trade. Now let's see what you did here. Opinion range breakout. Now this is a risky opinion range breakout. Why is that? This is already a huge candle, right? It's $1.20 candle. It's way extended from view up or far from view up, right? And it's close to a daily level right there. I'm not sure where to put the stop loss there. And when I'm trading momentum, when I'm trying to chase something, it's at least half of the candle, and half of the candle is still a huge stop loss, right? It will be around 60 cents. Yeah, around 60 cents right there. So the stock did already a dollar move, right? And you're having 60 cents move, so your target should be around 1.20. So you basically want NCLH to make a move of $2.30 with no pullbacks, and that's almost 8% of the price stock of the stock's price. So yeah, that's too much a little bit, and I wouldn't have taken this 1 minute open range breakout. If the candle was small and then the next candle is breaking out, then that's good. Remember, we don't take open range breakouts only if they are making new highs, right? Not each new high after 1 minute candle means this is a 1 minute open range breakout. Not each 5 minute high means that this is a good 5 minute open range breakout. We need to check the risk to reward and check the other time frames as well. Now you took it to the long side, this was a winner I see, and then you added more, and this was also a risky add, right? Because it's just simply going up, it's way extended from the 9 and the 5. This is where I usually start looking for parabolic reversals. And you try to take it to the long side and get stopped out, right? Another long, I'm not sure if this was a long or a short, and you get stopped out, and another long. And this is why I don't take the first new 1 minute high candle on ABCD pattern. Yes, this was an ABCD pattern, right? But this was a parabolic pullback. This was a parabolic pullback. And on parabolic pullbacks, I want to see a W shape before I take it to the long side, because sometimes they make a small reverse ABCD pattern. And I'm not sure what's going to do. Is this an ABCD pattern right here? Or maybe this is an ABCD pattern right here. Should I take it to the long side or to the short side, right? For that, we actually need a little bit more confirmation. We need this reverse ABCD pattern to fail and go up, where we take it to the long side, or it works and you take it to the short side. I wouldn't have taken it to the short side because it's close to the 9 and the 5, and I have that rule which I told you, never go short against the 9 and the 5, or go long when the stock is way extended from the 9 and the 5. So right here I'm going to be waiting for a long step. I like that you were looking for a long step, but we needed a little bit more confirmation. It held it, you took it to the long side. Here I would prefer to take it at the breakout right there just to be a little bit safe, and now that finally works. Finally the trend has changed right there and you actually caught it. Many trend rates used to back in trend in EMA 9 or EMA 15 in the 5-minute chart. And it's good to add or going in. I see you use more triangles in 1-minute chart. Is it better to use both? Yeah, Pepe, it's definitely better to use all the time frames and combine them together. You want to see a setup on the 1-minute chart, the 5-minute chart, the 15-minute chart. Don't trade only of 1-minute chart, right? That's why we're using multiple setups there. Multiple time frames, sorry. Now, let's quickly see what we have. Valentin, and then we have Urbano. Ken, did you meet the risk to reward? So partialing, it usually depends on your style and your risk to reward. If you get at least 2 hours, at least 1 hour and your style is trading to partial to 1 hour, I wouldn't say it's too quick. If you're partialing before your intended risk to reward, then it's too early. So yeah, you got more than 2 hours, then definitely, if that's your style and your rules telling you to partial at 2 hours, you didn't partial early. Now work, this was a little bit late for me, right? I see that it did the reverse ABCD pattern right there, asymmetrical breakdown short, failed to pop up heavily. This is actually not so bad. Looking at the previous support became resistance. Did the reverse ABCD pattern there? You took it to the short. Yeah, it wasn't so bad. It wasn't bad. One thing which would worry me, the wick right here, and that it's already made a huge move right there to the downside. But I see this was around 40% pullback on the 1-minute chart. The level it bounced off is the previous support area. So yeah, it definitely wasn't perfect, but this wasn't bad as well. Selling pressure right there, it took it to the short side and partial all the way down. Late on entry, best entry would have been 11-ish. Yeah, best entry would have been anywhere right here. This is a clear support, right? This right there is a clear support. So those were fake breakdowns right there. But once it broke it one more time right there, it would have been a really good entry. I wouldn't go heavier size. I never go heavy sizes. Not never, sometimes I do. But I usually go with my full share size. I don't go more than that. Urbano. Yeah, IG, I'll definitely get back to that. Urbano, you tried to get this thing to the short side, and why didn't you get stopped out here? So first of all, it was going against you, right? I think you took it to the short side because there was a daily level right there, but it broke it and it's continued going up, right? So this was risky. It could have just simply continued going higher, and it's the worst thing to get stuck in a short position, right? So why didn't you get stopped out? Was it your plan? Did you have any level right there? Because at this short, once it's making a new 5-minute high, I would definitely exit. I like that you held it and you made a good reward right here. You didn't immediately panic partialing at small. Move right there. But that's, yeah, it's good that how you held it, but definitely it would have been better to get stopped out and get back in once your setup is working out. And I'm not sure, was this another short? How did you get it right here at the peak? I'm not sure where Urbana is. I would have loved to know how he got this thing to short side there. Yeah, unless he had a very wide stop. But again, stop losses, they should be based on technical levels, right? We can't just take something which is going straight up to the short side and give it a wide stop, right? At least some indicator, at least a daily level, at least some resistance area, at least a new 1 minute low. If it's just simply making a 3-bar setup and then it's going up, there is no point in taking it to the short side and giving it a wide stop, hoping that it will finally work out, right? We need to make it reasonable. Like here, for example, it's already so extended, it's making a new 1 minute low, it's closing as a doji on the 5 minute chart, no daily levels there, no increasing volume, but at least there is something telling you to take it to the short side. Can the parabolic reversal itself is a pullback, right? You don't go for a full reversal move like this. If I take it to the short side here, I wouldn't take it for a reversal all the way to the low of the day or right here. I will take it only for a move to the 9 moving average on the 5 minute chart as the beginning, where I'll take 70% of my position off. If it works even better than that or even more than that, then that's perfect. I have 30% more and I will take partials all the way down. But at the beginning, we just go for a pullback. The price action is also an indicator, right? We definitely need something more than that. It could struggle. You could see the tick that it's struggling. I also do that sometimes, but it's not the best way to trade. We need a setup which is consistent, a setup which we back tested to make a living out of it, right? We can't go every time based on hunches or feelings. That's how we actually lose. We might get lucky sometimes, but we are going to get subbed out more often. Guys, unfortunately, we are way past time. This is my fault that I began watching 2 stocks for some members at the beginning, because of which I didn't finish the rest of the trades, so I'm really sorry about that. You could email me your trades, I will take a look at them, or just save them, and the next trade review I will watch your trades with no order. So even if you send them late, just tell me that you had sent them before in the previous trade review and I will take a look at them earlier. And IG, I will answer that question on my criteria to pick my watch list in the morning. I want to see a stock which has been going sideways for a few days or a few weeks, and then a gap up. If I see that gap up, I after that check the price action in the pre-market. If the pre-market is going sideways but above the moving averages, that will be the harmonious chart where the stock is gapping up and it's above all the moving averages in the pre-market, and once it's breaking the pre-market level, I will take it to the long side. If I see this on the daily but the pre-market price action is really choppy, I would simply avoid it. If I see this also but the price action is going straight up, then I'll still look at it for a reversal. Now let's quickly just take a look at some stocks from today. mRNA, look at this mRNA. You see that it's clearly in a range. So today, yes, it gapped up, right? But it's still below the consolidation area range. When I see this on the daily chart, even if we have a clear price action in the pre-market, which wasn't there, but let's assume we have a clear price action, clearly trending, holding support, not so extended, I wouldn't trade this stock. Because in the day, it's chopping in range, so it could simply go a little bit up, a little bit down, and it could just do literally nothing. This is not a bad price action, by the way, but that's what I was saying. Dan, I don't drink coffee a lot, maybe 1 cup, but I use a pre-workout, which has a lot of caffeine in it. So yeah. That's it for today, guys. Have a good day. Don't overtrade. Thank you guys on YouTube for sticking here with us. If you guys have any questions, email me at ayman@beerbulltraders.com and I will be happy to